Regis Philbin once said, "Stock market is fun, but sometimes it's very painful." What's going on, everyone? My name is Tom Martin, Wealth Management Certified Professional and Financial Advisor with Valark Financial Services, and welcome to this Outlook 2023 highlight. That quote from Regis is spot on when we consider what happened just in the past couple of years in the stock market. Investing was a lot of fun towards the end of 2020 from an investment point of view, and even some of 2021. And then last year happened, and that was not very fun. Good news is last year is over, and I've met with my investment committee, and we do see some better times ahead. We think that the stock market can gain anywhere from 12 to 15% in 2023, and that we can potentially avoid a recession. And that's our base case. It's not a popular call, but it's one that we think can happen. Lastly, we believe that bonds can have more of a normal year between 4 and 5%, which is very welcome after the rough run that the bonds had in the markets lately. So let's take a look in the rearview mirror for just a moment. This was the first year in history where stocks lost more than 10%, but bonds also lost more than 10%. Normally one zigs while the other zags, and unfortunately that's just not what we saw last year. So why was last year so horrible for investors? Well, we can't just pick one thing. We had 40-year high inflation, the most aggressive Fed that we've ever seen. We've had China start up and then being forced to slow down again or lock up again, and then starting back up again. We had the devastation that happened with the supply chains, and then of course the horrible war that was in Ukraine. And when we put that all together, it was just a harsh environment for investors. But that's the rearview mirror. Now let's take a look forward. In 2023, we don't believe we're going to see a recession, but most people do. So why is our point of view very different? The answer is the consumer. It's you. The consumer has been resilient, and it does make up about 70% of GDP. The consumer is still spending, they're still creating jobs, and this is just one of the few reasons why we feel we can avoid a recession. Now, let's be very clear. Housing is possibly in a recession, and we have manufacturing that may go into a recession. Things aren't perfect, but with some of the improvements to come, the second half of this year could be very strong. Companies are releasing earnings, and many are coming out better than expected. At the same time, inflation is an important part of the economy. The good news is inflation has peaked at over 9% last summer. Inflation is coming down, and that's a really good thing. Why does it matter? Because it lets the Fed take their foot off the pedal. The Fed hiked very aggressively last year. They did 4 consecutive hikes of 75 basis points, the most aggressive hiking schedule the Fed has done since the early 80s. If inflation keeps coming down, like we think it will, we look at rents coming down significantly. Used cars prices coming down, energy prices, you'll be able to fill up your tank again. It'll be cheaper than it was just 6 months ago. There are lots of reasons to think that inflation will be coming down, and that means that the Fed will not be as nearly aggressive, and we even heard that from their latest Fed meeting. And this can be a very positive thing. Let's talk about stocks for a second. Again, the worst year for stocks since 2008, last year. Last year was also a midterm year. In a 4-year presidential cycle, midterm years are actually the worst years on average. You can see a 17% peak to trough correction in the midterm year on average. We had a 25% bear market last year, but the good news is that the pre-election year, that third year in the presidential cycle where we are right now, is typically 17% higher on average. The best in the 4-year cycle. Oh, and by the way, when you're down in a midterm year like we were last year, that year following has been higher every single time with a 25% return on average. So if you have inflation coming down, you have a consumer still strong. Maybe the US dollar continues to weaken like we think it can. That can help earnings just a little bit more than people are expecting. All of these things, and With all the headwinds that last year and the tailwinds this year, this could be a really good thing for stocks. And I'll leave you on this. Before I talk about bonds, when inflation is lower than the previous year, the S&P gains approximately 13%. It's about half of that when inflation is higher. Inflation is most likely going to be much lower this year, and that's just one more piece of the puzzle that suggests that stocks can have a nice bounce back this year in 2023. Now let's wrap up with bonds. Bonds had historically a poor year last year, and they were even negative the year before. So it's been a rough go for bonds over the last couple of years. Good news is fixed income is starting to normalize. We think things are going to be a little bit normal this year. We think that bonds might get anywhere from 4 to 5%, like I said earlier, with most of that coming from yield. We're going to finally have yield, and that's going to help provide some diversification. What made last year so rough was that stocks were down a lot, and so were bonds. So bonds should yield 4 to 5%, and that's a nice change from where we were. I'll finish this up with China. When we look at the Chinese word for crisis, it's 2 symbols, which translates to danger and opportunity. Clearly, last year was a crisis for confidence, the stock market and the bond market. There was a lot of danger out there, but we did make it to the other side. Now we're looking for opportunity, when we really think there could be some really nice gains for investor this year. And if everything plays out, I'll definitely be smiling as I'm looking at my clients' accounts balances this time next year. So with all that, we are your investment research team here. So we are very happy to be here for you. I'm so honored to be here talking to you about where I see the world in 2023. This week, February 8th, I'll be hosting my 2023 Market Outlook video. It'll be an in-depth review of how we think you should be investing for 2023, as well as what's going on in the economy. Registration is currently open right now. Take the time, register, invite your friends and family there too. I'd love to see them on there as well. I wish you guys a lot of health in 2023, a lot of fun, and maybe even some gains in your portfolio. I hope to see everyone again real soon. Take care, and I hope to see you register. Bye now.